Friday, we had a bad jobs report. We're still not in a recession. Indicators are showing that we're headed towards one, but, the indicators have been wrong before. We are headed towards one. We're headed for a depression at some point. I just don't know when. And we're headed for a massive global collapse. Again, I just don't know when. Nobody does. That's why I ask you, please be prepared. And please take my... Look, I'm not an expert in anything. Nothing. I'm a former DJ that is a recovering alcoholic, and I'm a self-educated man. So take everything that I say with a grain of salt. I need you to do your own homework. I hope, honestly, this hasn't happened yet, but I honestly hope that you do your homework and you find out, wait a minute, Glenn, you're missing this. And you show that I'm wrong, because I want to be wrong. But it is coming. And we are in the birth pangs of the future. We are giving birth right now to the future. The baby is coming out, and I don't think we're going to like it. I think it's going to be one of those babies that comes out and is like, hey, mom and dad. And guarded by Rottweilers, but we're approaching something. And our Dow is down almost 1,200 points in futures. The reason why this is so important is because it's not alone. Friday, bad jobs numbers, we were down 611 points. That's a pretty big fall. This morning, before we even open up, we're down almost 1,200 points. That's almost 2,000 points in 2 days. But in Japan, stocks were wiped out. This happened while you were asleep. The Nikkei 225 is falling 12.5%. That is the biggest single-day decline since Black Monday's collapse of 89 or 87, I think it was. Also, if you read any financial news over the weekend, you saw that Warren Buffett is selling like everything. He is having the biggest fire sale he's ever had. He's never sold stocks, dumped stocks like he's dumping them right now. That's what happened to Apple a couple of weeks ago. He said, I don't really feel comfortable with Apple. I'm going to sell. But what we didn't know until he had to file is he's selling everything and holding on just to the creme de la creme. What does Warren Buffett know that we don't know? Nothing. The difference between Warren Buffett and you and me is he trusts his gut. He trusts what he reads. And he doesn't wait for other people to verify. His team verifies, and he trusts his team. The words of my grandfather keep ringing in my head. If we only knew what the rich people knew before the Great Depression, we would have been fine. Well, what are the rich people doing? Also, China found out this weekend they are buying, I think it was 50 tons of gold more than they said they did. They said they stopped buying gold, but now some sleuths have gone out there and looked because something wasn't right. And all this gold was being shipped over to China, and they realized, my gosh, China is still buying it. They're telling people they're not to try to keep the price down. So what are the rich people doing? What are the people in the know doing? The VIX, which is the volatility, something that's really important if you watch stocks, but it's just important for you to know. And this is off the top of my head. In 2008, the VIX, the index of volatility, how volatile are things right now, was at, I think, 47 in 2008. In COVID, it was like 56. And it's currently on a scale of 1 to 100, 65. So that is an alarm bell that people watch and say, what's the weather forecast? What's the VIX say? Are we headed towards really choppy seas? Yeah, according to the VIX, according to them, more than 2008 or COVID. Intel just announced they're cutting 15,000 jobs, or 15% of its workforce. The stock market now, I have lots of questions. Can you just give me the update on what's happened around the world and then with the opening bell with the stock market?
So last week, obviously, we saw some selling off in the stock market. It started with a repricing of the quote unquote Magnificent Seven tech stocks that had been driving up the market, taking everything else up with them. And I think there was an awakening that, in order for AI to be a thesis, companies are going to actually have to spend a lot of money. And that started kind of things, a few weeks ago moving. Then in the middle of last week, we had the Fed, who did not lower rates, but did signal that could be on the table for September. And, normally you would say, okay, the market wants the Fed to cut rates. But what happened is then we got a weak job report on Friday. And while sometimes, the bad news can be good news for the market, in this case, they took it as bad news that potentially the Fed was behind the curve in terms of lowering rates, and that, that they felt like maybe this whole idea of a quote unquote soft landing, the idea that you can get the economy and inflation down without wrecking the economy, is off the table. Then, while all of this is going on, you have the Bank of Japan last week that decided to do the opposite of the Fed. They have been in 17 years of basically negative or zero interest rates. So their normalization is going in the other direction. They've been trying to raise rates. They did so for the first time in 17 years about 4 months ago. And then they decided, because the yen, the yen against the dollar, they needed to fix that they were going to go ahead and raise their rates. And unfortunately, they did not thread the needle perfectly on that, and that created implications for their markets. So when Japan opened, last night, our time, their time in the morning, they saw this massive sell-off. And what happens sometimes when you get these massive sell-offs are these unwinding of trades. Because they have had zero to negative interest rates, you get a lot of people borrowing. Those people who borrow make bets on the yen and on stocks, both in Japan and in the US. And then they get the margin calls, and then they end up having to sell, and that begets more margin calls. So you saw the Japanese Nikkei go down 12.5% in one day. It was their single worst day since 1987, that Black Monday day. So now, as the market has opened here in the United States, there's anticipation of, do we get, how much blowback do we get? Especially since we had seen some weakness last week. And, obviously things are going to shift during the trading day as we talk a lot here. So this is kind of real time, but the market opened up down pretty significantly, depending on the index, somewhere between 3 and almost 5%. And we have seen that come off a little bit as we're talking real time. I think that is, if there's any silver lining here, it's not that it opened and then it continued to fall and continued to fall. There was a little bit of support there. But still, as we're talking, we're still seeing the Dow down almost 3%, the NASDAQ down almost 4%. So it is definitely an ugly day across the market.
So how much of this has to do with technology? I mean, NVIDIA, which was the darling just, a month ago, everybody's like, God, I got NVIDIA. And maybe that's greed talking, and that's why you shouldn't buy NVIDIA when everyone is saying that. But they're down almost 10% today. That's down 23% from their high I think like a month ago. Artificial intelligence stocks are down. Tesla is down. Super microcomputer down 9%. Is this just everybody down? And why are the tech stocks down? Were they just too high? Do you know?
Yeah, so this is a bit of a repricing in tech. And let's put this in perspective. So the NASDAQ, which is very tech heavy, is sort of a good proxy for what's going on in the tech market. The 52-week range, the low point of within the last year of where the NASDAQ has been was 12,544. We're still today at over 16,000. So over the last 52 weeks, we still have these massive gains. It got as high as 18,671. And I think that's part of the catalyst here. I mean, these prices, this quote unquote bubble was not sustainable. A lot of people were talking about that and the fact that, we see this over exuberance in tech all the time. First it was, Web3 and Internet of Things and, the metaverse, and now it's AI. And all of those theses have eventually, come back down to reality. I'm not sure we're in reality yet, but as you have companies talking about their earnings and talking about the spend, I think there was just this insanity amongst investors that they felt like AI was just going to take off without looking at the cost side. And as companies are coming out and talking about, oh, here's how much capital we're going to have to deploy in order for this AI thesis to really work out the way that it has, I think the market went, okay, maybe we're not, pricing this correctly. So I think that's part of it. Another catalyst that we've seen is Warren Buffett noted that he had lessened his position in Apple by about 49%. And obviously,
that's not lessening. That's not lessening. That's cutting it in half. That's significant.
Cutting it in half.
What does
it is?
And he's doing this with a lot of his holdings, if I understand right. He's making some of the biggest sales he's ever made. It's almost as if he's becoming bullish on America. And what does he know that we don't know again?
This is a good question, and it's funny that we're having this discussion today, because if you go through his shareholder letter, one of his other really big bets that he talks about in the shareholder letter is starting in 2019, he doubled down on Japan. So he has 5 really big companies and really big positions in Japan. Wow. So the day that we're talking about Japan going down and at the same time the U.S. is going down, obviously Warren Buffett was not a catalyst for both of those things, because he's still, as far as we know, still bullish on the Japanese trade. But it is interesting. I mean, he has this massive cash pile. I mean, $276 billion, I think it is, which is just almost impossible to deploy. I mean, to think about how, as an investor, do you even think about putting that to work and getting the appropriate returns? So I don't know. There could be several catalysts. This is all very much speculation because we have not heard from Warren at this point. Right. I don't know if this is a signal where he felt like, hey, tech is just getting, so frothy. This is a really good time for me to take profits. Maybe a little bit of taking profits ahead of the election, a worry about an increase in capital gains, perhaps under a potential new administration. Although I don't think that he would have sold, half of the position because of that. But one never knows. And yeah, just repositioning his portfolio. But certainly, given the fact that he is lauded as the best investor of all time, when he does things, people have concern. And the fact that, whether it's Bank of America or it's Apple or some of his other positions, as the fact that he is going to cash, certainly I would imagine on the retail side and probably on the institutional side to some extent has an impact in terms of people's behavior.